Today, our journey continues. We will keep analyzing multi-time frames with price action and smart money techniques. Of course, we'll be using our best trading view indicator in this journey. So, you can see how the momentum strategy really works. Let's start now. Let's talk about how to take trades and shift our bias or direction on the fly as the price action keeps changing. For example, in a crashing market, when the price pulls back into a multi-imbalance area, usually lining up with a supply order block, what is the first thing we normally think? We naturally want to follow the overall trend and ride the move down with it, aiming for a clear target like the previous day's low. That idea is simple and honestly, it is usually the right approach. But the truth is, it doesn't always play out the way we expect. And if you get stopped out, that's completely normal. So when the order block and the imbalance fail and you get stopped out, what can you actually do next? What should be your next move? We have to start thinking about how the structure is shifting and how the internal trend might be changing after a big failure like that. What usually happens after you stop out is that the order block, that failed order block, and the imbalance can flip into a support and resistance zone. And it can actually help guide your new direction toward a fresh target like the previous day's high above. And this is exactly how you adjust your bias and switch direction on the go when a trade fails or you get stopped out. Let's check out this Bitcoin chart. This setup is a mix of 1 and 4-hour time frames so we can get a clearer look at the price action from both angles. And we got some clean targets sitting above and below the previous day's high and low levels, with the price right now stuck in the right middle of everything, as you can see. So, Bitcoin has been in a pretty strong bearish move over the past few days and weeks, and this 4-hour imbalance is showing me that the bears are still in the control and pushing the price downwards. When you switch to the 1-hour chart on the left, you can see the 1-hour imbalance lining up with a 1-hour order block supply zone. Price also forms this inner liquidity level. So naturally, I'm expecting the price hunt that inner liquidity, tap into the multi-imbalance area with the order block, and drop into the previous day's low. This is option 1, and honestly, the most natural and likely move we could get. Our second option is that the imbalance and order block fails, flip backs into a support and resistance flip zone, and price goes after a new target like the previous day's high. As you can see, we created two clear options here. So, I am expecting option 1 to play out. And if that fails, then I will look for the option 2. As you can see, option 1 played out really well. And this was the clean move that we were expecting from the start. Okay guys, this is how you build your trade plans on the fly before things happen. Now let's talk about the next day and what actually happens during that session. First of all, we get a new previous day's high and a previous day's low to work with. And when you check the 4-hour time frame, you can see a pretty clear and white imbalance zone sitting here. And if you drop down to the 1-hour chart on the left again, you will notice 1-hour imbalance lining up with an order block. So, what do we expect in a spot like this? Now, if I had to put my money on it, I would short this setup again. It looks almost identical to the setup we had the day before, right? What I expect is the price pull back into this multi-imbalance area, tap the order block, and then dropping toward the PDL, take out the previous day's low. The exact same play with the previous trade, right? And okay, next possibility is still on the table, which is more of a low priority option for me, is that the order block and imbalance fail, and price pushes higher to go after the previous day high. But as you can see, this time my first idea did not work out, and that main play to target the previous day's low completely failed. Instead, the imbalance and order block didn't hold and failed, and the price just shot straight up to hunt the previous day's high above. As you can see, it really does not matter how clean or how high quality your setup looks, because some days the trade will still fail. And you got to stay flexible and open-minded, enough to flip your direction and adjust your bias when the price action tells you to do so. You can't just walk in saying, I'm gonna hit the previous day's low all day long, I'm gonna take all the shorts. No, you gotta adapt to what the price is actually doing. Okay friends, I hope that this video was educational enough. Take care of yourself for now and see you next time. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.